Check, mic check. 1 2 1 2 CTM. What's going on, everyone? I hope you're well and doing great on this Wednesday. Summer sessions upon us. We're going to take a look today, a deeper look today, what's going on and what credit is signaling. Looking at our blood indicator. Today, we're seeing a nice risk on day. Obviously, we're all about it. Our positions continue to hold, our two open positions of TQQQ and also in NVIDIA, and we saw a stop out, or not even a stop out, I'm sorry, and we saw an exit out of IBIT on the open today, taking a minor loss over here, call it a 0.25% out of the market, and now you could see enter long pending once again. I love it. Fantastic. All good. You got to go ahead and just when the momentum pushes, that's when you're holding. This morning, yesterday, with a lot of pressure and just letting go. Today on the rebound, looking to get back in. Looks good. I'm all about it. NVIDIA still holding open position, 24% into profit. This open position here running since early June. Same thing with TQQQ, now 32% into profit. That is our positioning. We are sidelined except for Bitcoin bull runs, still holding open position here, 16% into profit. I'm a little bit curious as we get into today's session what we're looking at as far as any upcoming potential entries, whether or not we are getting close. FNGU rebounding here. We're looking at still the CTM filter and the ST1 keeping it out. MicroStrategy continues to be under some pressure. We have this early trend line break to see that if we're able to go ahead out of this, well, I don't know what to call it. Well, a retest of support, a failed attempt to launch, but setting up another potential launch pad. We'll find out whether or not it's able to go ahead and resume up, or we're just positioned perfectly out on the sidelines. And then Tesla, I think Tesla's getting ready here to do some Tesla things as well. It's got to be setting up for a big move after consolidating here for months. First months over here, and then again months over here. Nevertheless, we are sidelined, waiting for that momentum to kick in, and we are certainly positioned on the right side. Bitcoin, taking a look at from a discretionary basis, what's been happening over here, and we have, for a couple of observations, a few different observations. First observation is that we continue to hold the last leg up. Here's a breakout. We were consolidating with like a bull flag. We've saw some signs of weakness. The first breakdown of that yellow line, that sell impulse, right into our red line of support. We don't want to break it. Back into a retest of that broken yellow trend line support, coming in for breakdown retest. And then so far in the resumption down, the red line of support continues to hold, but we're still just very, very neutral. Look at this. Let's zoom in over here. And I'm going to go ahead and, do I move this up to where the we peaked off of? Right around there. It fits well with these two peaks over here. I'm just trying to get a little bit of a guidance over here. You can see again the resistance over here, support. It's fuzzy in that area. I don't know if it gives us too much of an aid, being that we got to break and close above the yellow line for this to be invalidated. Right now, we continue to just be consolidating in what could be perceived even as a bearish continuation pattern. We have to invalidate that breakdown in order to feel better about the situation. If we break down, you all know that this becomes a little bit of a hold your breath type moment. We spent a lot of time recently on just making sure we were aware from a discretionary standpoint what's going on. I hear the word tariffs, and we see that Trump has initiated an additional 25% tariffs on India. I'm not sure if that's energy specific. I imagine it is, being that they are selling Russian oil. They're buying Russian oil, and then are they reselling it? I'm sorry. Whoa. Okay, so I don't know. Sorry. Trump signs an executive order imposing an additional 25% tariffs on India, and then if it says 50% over the Russian oil purchases. So again, I'm from afar here, just reading some headlines to you. I'm not sure if that's 25% and then another 25% on top of on the energy on oil purchases. Not sure exactly what's happening over there. How's oil reacting though? Something I just want to take a brief look at and this jump over. Let's look at what is going on here. And yeah, oil looking very good. Why I say it's very good over here, I continue to watch for signs of those higher inflation upticks. Oil's not suggesting that that's what's in the cards, and we like to see that. That would be a risk for the market's true inflation, showing now a drop down from 2.04 down towards 1.7. That's looking healthy as well. A lot of people are looking for and wondering, are we headed towards some type of stagflation, stagnant growth, and higher inflation? But we're not yet seeing any signs of that inflation. We'll keep an eye on it because that's something we'd want to be ahead of. One of the headlines today, by the way, that's pretty important, and I guess we're just going to revisit since a lot of people are talking about it, is that the Fed just published an article discussing potential gold revaluation. Now, what's interesting about this, I believe this has to come from the Treasury. The Treasury is the one who has the opportunity to go ahead and revalue gold. It wouldn't be like an overnight revaluation, revaluing gold higher. It would be revaluing how like the Treasury holds its gold assets at the price now of say, for example, 3,300. But what it would, so it wouldn't change the price of gold. I think that would be very well conducive to the overall, let's say, bullish bull market factors that are contributing to gold. But you wouldn't be talking about revaluing it higher, for example, to 20,000 or anything like that. But what it would do would be just create, like, out of thin air, roughly $850 billion that would then go into the Treasury account, and then they could do things like buy Bitcoin with that, right? Like that would be something that they could use if they wanted to. But Treasury Secretary Bessent, when asked about that, said that they have no plans for that. So I mean, interesting. I have to believe him at his word. But what's interesting also here is that you're seeing that other governments are exploring the same, and we're seeing signs that it's been floated not only in the U.S. but recently in Belgium. So the EU potentially here looking to do the same. And if that were to happen, either way, whether it was the U.S. or Europe or both, whether or not the U.S. used those funds to buy Bitcoin or not, either way, this is like QE, right? This is just very, very conducive of overall liquidity in the markets, and that would be something that risk would likely benefit from in a really, really good way. But I don't really think this is something that's going to change the overall price of gold, or gold's going to react very well off of it. It's just simply revaluing the Treasury's holdings of gold. It's not revaluing gold itself. Gold here, we're just watching that purple line. That would be the next sell impulse. Looking good, looking healthy. Extraordinarily oversold now since April. So let's check in on silver. Still holding our earliest sign of some type of early underbelly breakdown occurring. Wouldn't even be a breakdown. It would be likely more of a reversion towards the mean into what is a healthy pattern developing, continue to develop here on silver, as I have my eyes on 50 and above. I guess we'll start over here. I want to just start over here, and then we'll get into, obviously y'all wanted to look at the blood indicator and just check in on what is happening over here, if there's any signs of liquidity. Luke did post the day before inside the Discord as far as high yields, and we'll take a look at what's going on from his vantage point as well. We'll put it all together. And then I just want to jump back over here, and the headline that from this article was please let me see it. Here you go. This is the headline that drew my attention, and it says Germany's insolvency tsunami, a structural breakdown underway. And then right away, I was thinking to myself about the DAX being at all-time highs and Germany being in a recession. And I wanted to take a look at that further. So I didn't even read the article. So I'm not reading it with you either. But what I did just jump in and I went ahead and before looking at a chart of the DAX, I just checked in with Grox. I guess that's his new name, Grox. And he was saying, look, is Germany in a recession? And key points, the German economy contracted in 2023 and 2024, marking 2 consecutive years of decline. That's not even a official recession, back-to-back quarters of decline. This is back-to-back 2 consecutive years, the worst performance since World War II. You would think that the market would be getting destroyed. By the way, projections for 2025 are seeing lots of stagnation, 0% growth. Not really the best. And let's take a look at a chart and then we'll dig in further. So let me just jump back over here. Let me just pull up the DAX. And I guess we'll go with here. And, 2 years, the last 2 years, 2023, 2024, 2 years of back-to-back contraction. And the whole time you see that the DAX is just rising to new all-time highs. And what's up with that? What's going on, right? So I wanted to just dig in a little further. So I went to Perplexity and I said, why is the DAX trending upwards the last 2 years? Near all-time highs with the German economy contracting in 2023, 2024. And basically what Perplexity offers is that, listen, that it's the diversification, the global diversification of DAX companies, right? And it's not just Germany specific. And largely, it's the outperformance of tech and certain sectors. Right, so that makes a lot of sense. And then we think of the U.S., or I think of the U.S. and I say, well, 23% of the index is made up of 3 companies: NVIDIA, Microsoft, and Apple. What about them? Do they have some type of global, like how much of their profits are domestic and how much are global? And interestingly enough, it's about 50-50, and Apple is 65% non-USA sales, which is quite interesting. But then the question is, well, because it happened in Germany, could it happen in the US? If the US were to head into recession, what do we think that the market would do? And just bringing it down further, or continuing the conversation, I should say, well, what are the chances that the U.S. enters a recession without it being a global recession? Would it be possible that, for example, if the U.S. were to enter a recession, we have obviously right now the U.S. market's highly concentrated towards a few different companies, and namely these 3. And we see that they have a healthy balance between U.S. domestic sales and foreign non-USA sales as well. However, what are the odds that the U.S. enters a recession without it being a global recession? And while the probability of 2025-6 is currently estimated under 30% and down from what it was, 30-40%, you know what? The odds of the U.S. entering into recession without it becoming a global recession or dragging down the global economy with it are just, I mean, it could happen. Anything could happen, right? But it's very unlikely. So that was just a fun little exercise off a headline, and then we continue forward. I've covered a lot to begin. Let's keep going, and I'm gonna, as I normally do, keep it for the back end over here. So Bitcoin continuing its movement, its climb within the sustainable channel. We have a couple of different adoption events taking place. $10 million I mean, I don't even know if you want to call it retail at this particular point, but Michigan State Pension Fund just bought $10 million worth of Bitcoin. And that's awesome. That's amazing. Because 4 years ago, it was talked about like you had this like random firefighter, maybe North Carolina pension fund buying a small position in Bitcoin. But now you're talking about Michigan State, and we are continuing to see the ball rolling in favor of adoption. We all know that Cynthia has been trying to push the Bitcoin Act, and there's no sign of any movement. It's just kind of proposed and kind of stagnant for now. We would love the opportunity to see a vote, but other countries seem to be moving. This is a big deal, I think, over here, seeing Brazil Parliament on the 20th of August to hold their first hearing on a national strategic Bitcoin reserve. I mean, that's a major development. We saw a lot of states voting on Bitcoin reserves, strategic reserves, and most of them didn't make it out of their respective houses. So whether or not this is going to gain any traction or not, I find very, very, very interesting. And for sure, you saw Brian Armstrong yesterday, CEO of Coinbase, even talking about, from what he says, I don't want to misquote him here, but I believe he said every single G20 country is looking at taking a strategic Bitcoin reserve. That is quite notable. Are we going to see the move into, as we move from early majority into late majority, are we going to see that nation state stacking begin? Bitcoin looking pretty good here at $115,000. And we are currently, when it comes to Bitcoin and crypto, on the sideline, awaiting the next opportunity here for a signal to arise. Dun, 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 dun. Is it going to happen? I mean, it seems that the president and his cohorts are certainly front running what seems to be, at some point during their administration, a major move. Will it be the Bitcoin Act? Will it be the Treasury revaluing gold, just printing out of thin air, $850 billion or so, in order to go ahead and stack? Because that would be, I forgot what they called it, budget neutral, right? That's obviously budget neutral. They could do it if they wanted to, or they could do a whole bunch of other things as well. They could pay off the debt. They could buy bonds. Who knows? They could do a lot of things. Obviously, we would love to see the U.S. take a major position, and I'm sure Saylor would love that, obviously, very much as well. Let's take a look at what's going on a little bit further. I'm going to come in and we'll start off with, I guess, the NASDAQ here. Looking good, up now after yesterday's pretty significant gains, putting back together now another rally. What am I saying? Yesterday. Sorry, the day before. Summer vacations, y'all. A little bit of love, a little bit of ease. Yesterday was a banger session. I really enjoyed it. The flow was tremendous, and it was why it was a little short session, summer session, 30, 40 minutes. It was very impactful. So I'm grateful for this continuing conversation that we're able to work out each and every day. Yesterday, early on in the intro in the session, it was brought up, well, let's check credit, what's going on with the blood indicator. So we're going to take a look at that today and dig deeper into that. But it looks like so far, from, just making observations, we had Thursdays and Fridays, big sell off, and then a major, major bounce on Monday. And then yesterday, right, about a 50% retrace. And so far, that's being fully retraced. And it looks like here that we have the potential to put in what would be a bullish engulfing candle off of yesterday's price action. Looking good. It's nice to see not only the equity markets here. Russell, by the way, was up yesterday. So being off today, that often happens, where you'll see, for example, like yesterday, NASDAQ down, Russell up. Next day, I'm not reading anything into that whatsoever. And it's nice to see Bitcoin and crypto in the green as well. We love the likes. Hit the likes. Nah, I'm just glad you're here. honestly. Replay crew, big shout out. Lots of love to y'all. All right, let's continue. So I was just trying to get my bearings of what's going on, and I'm going to continue that where I guess we call it. I was trying to like say backfeeding, but that's not the word I'm looking at over here. Seasonalities continue to be seasonalities. We continue to be just aware right now through not only August and the September for what is an unfavorable period. Why we're in this unfavorable period, we're also aware that the TGA is currently refilling the Treasury General, the TGA. I'm a little off. The Treasury is refilling the Treasury General account. We have noted two other periods, the last two times they did that, which have been very very bearish for equity markets. In the most recent refill in 2023, we saw that the Nasdaq corrected 14% in this particular refill, and then we talked about a lot recently the prior one. It was a much deeper correction, but there was a lot more going on than just the refill. And we are seeing that the repo, as the Treasury here is offering those new issuances, and you could see that they've just been like boom, 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 boom. We've been following it, we've been tracking it. Even though Trump said he doesn't want anything over 10-year offered, you could see there's a 30-year. They're trying to raise $25 billion on the 30-year. We'll have to keep an eye on that auction to see how it goes. And then we have also the 10-year coming up as well. And then the rest is likely going to be, the majority of this is all going to be short-term duration. And as that's happening, we are seeing a drain on the repo towards the lowest levels that it's been since the last well, going back all the way to 2021. So it'll be interesting by the time August passes and into September. Then in October, they lay off a lot on the new issuances, where the repo market is. This is like just a backstop of liquidity. And when it's no longer there, it doesn't mean that something breaks, but it is the clock has then just like accelerated the ticking, and then we're be talking about, you know, what is credit signaling today, and they're all connected. And I have to say, I think anytime there's a credit event, that's simply like the best case scenario for ease of navigation. What am I talking about? Usually it's pretty apparent when it's major risk off and the markets are indeed during those windows of it crashing. The markets are not crashing, but when they're there, I want to be there. I want to be on the right side. And those are normally, for myself, very easy periods to spot and to navigate. And then when you have some type of action by the Fed, this would actually, like, a credit event would actually, I did quotes, quote unquote, would actually put pressure on the Fed to have to act. And then I just want to point out, when you see the Fed cutting into what would be a panic cut, you could see that, you know, whether or not it's 3 months, S&P on average up 9%, 6 months, 13%, 12 months, 17%. It's pretty easy to navigate, because what do they have to do? Well, they have to come in and they have to go ahead and actually flood the system. And then obviously risk responds very well to that. So is that setting up? Let's see. I'm like, I was very wrong about, come back over here to 2023, as the Treasury was getting ready for this refill. I said that, well, I think that's going to come from the repo, but I thought it would be drained. And sure enough, you saw a massive amount of money come from the repo market. But I thought, I think by March 2024 it would be drained, and obviously it was not. And then not only was it not, you know, fast forward well over a year and it's still not. So now I'm saying to you, well, I mean, I got it wrong. I mean, obviously I got it right in so much as where that refill was going to come from, but I thought it was going to be drained, and I thought that this clock ticking was going to be accelerated. And then, you know, what got me is Well, the Fed is doing a great job here as pushing out the cycle as far as they can, right? And that's their job, and they're doing it well. And here we go. But I want to see now, as we are at a very unelevated level, and they're looking for a big raise, whether or not indeed this is the time that it's drained or not. So now I just want to be more of an observer and find out what happens instead of being telling you, well, for sure in the next 2 months it's going to be drained as they raise $467 billion. It's got to come from somewhere. Right now, we're looking at a significant probability of the Fed cutting in September, but I'm going to say it's still on a pause is still on the table. With less than 10% probability of the pause, we have inflation data ahead of us. We have 2 more inflation data prints ahead of us next week. This is a light week as far as the calendar. Next week, obviously, we're going to be looking and seeing how the official numbers come in, whatever that means. And then obviously we have core retail sales. We have to keep an eye on the consumer. That's some of the hard data that we continue to track and watch for. And where's the flow? It was all here yesterday. Bonds, nothing. Dollar here towards this purple line, the pink line that Ace gave us. What's interesting about this is obviously the dollar right now is beginning, ever since that really bad non-farm payrolls, and you can see the massive sell-off on the dollar, it's beginning to price in those rate cuts. Again, I'm not sold that we're going to get those rate cuts. What's interesting is that there's the symmetry off of the 2 touches here off of that pink trend line that Ace offered yesterday. And then what about this one, the purple one? Do we also have any type of symmetry? And in this area, yes, and that's double, right? You could see the bodies into the wicks and then the wicks into the bodies. But then that was broken, and this would have been, this is the learning experience, I think, from myself. This should have been an underbelly. That for sure, sharp symmetry, or breakout above, and then you can see the retest right here. Once it broke below here, that should have been the looking for the weak dollar. That should have been the underbelly. If you don't know what I'm talking about as far as underbelly, inside the Discord in the Nuggets channel, the second to most recent post in video is a video clip of me explaining underbellies and what they are, as well as it's pinned to the top of that channel. So I think both of those continue to be in play. I would say that the purple line breaking down over here, I just want to see further. No, right? I feel like it's fuzzy structure. Maybe I have my line wrong, but here I could see support, resistance. I don't see it in play at all over here. I guess I do. I'm trying to learn. I'm trying to figure this out. No, we all do it together. It's CTM. That's CTM style, obviously, is that collaboration. And there's something going on here. There's something going on with the structure that I'm pointing out, but I'm also then trying to figure out how it would benefit, and I can't find that. So here you go. You can see over right now as we're into this confluence of support over here, and that's good. It's just the last line of defense. If that breaks down at this particular point in time, then likely we're going to see a further weakness in the dollar. If that's happening, I'm going to go ahead and I'm going to speculate that what's happening here is that rate cut is happening in September, and that the market is going to begin pricing in further cuts. I'm going to be a little nervous about navigating when the cuts come, because honestly, I don't know whether or not at this particular moment they're cutting into a recession or normalization. So I'm going to have to just stay in front of it each and every day and figure it out. I like that a lot. That's pretty good. So we have a zoomed out version somewhere over here that I'll just pull up really quick. And we'll move that arrow really quick. So, and this one's impossible for me, y'all, because look over here on the top trend line of this channel, and you can see all these touches. And then if I go to log, right? Yeah, I like my linear. I guess the log I could make the case. A lot of just whatever today. I mean, this is log. It's such it's 2 decades. Obviously, that you should be on log when you're looking at price over this type of time span. Interesting. I could say that's pretty close. This was a pretty close touch to the previous 2021, but for some reason I'm not sold, even though it's very unorthodox. I feel like it's so clean, including that last touch over here on linear. So how about that, Robert? That zooming out here didn't give us too much of a any type of clarity. Maybe we should just do it over here and then come back down to a 3 day and just observing over here. And no, I think it's pretty actually like for honestly for me, this was the big move, and we rode the majority of the big move. And then there's been a lot of flip-flopping for the last, I don't know, several weeks, back and forth trying to stay on the right side. And price has done nothing but chop and consolidate in that period. So, yeah, and what happens after big moves is either further really big moves or you move towards finally that reversion and chop consolidation. So it's not always easy to know what's going to happen next, but I think that as you spend more and more time in the markets after a series of prolonged like big moves in either direction, to be looking for that chop and consolidation, I think is really smart. But yeah, uh, I think that I'm perfectly good navigating this area as we continue to do so, and nothing easy about it, and it's not clear, and it's not very easy, and that's what's going on right now. All right, we got everything out of the way. I think I don't know if we looked at the 10-year. I mean, we didn't look at the 10-year, so let me just pull that up. And I mean, there's nothing else to say. The coil continues. It's exactly where we are, and the coil continues. Line chart, I like that idea. This is a bit of a creative discovery session, and these are some of my favorites, so we'll go with it. Let's check out what's going on, and I don't have a read. I don't have a read. I think that lines up. Let's go to back to a candle chart and see the wicks. And so why that's pretty important from my opinion is if we break the purple line, that's where this is a target area that we could look for on that move down. So I think that's significant. And then what about this? Is this what we're looking for here as we chop around ultimately for a breakout to the upside? I think so. I think that's, break of the purple, targeting over here. This is, would this be a breakout? Is that like a bottoming bull flag like this? Kind of like a wedge, right? Perhaps and potentially. That's all I could look for. I mean, obviously, I'm very comfortable in the unknown and when I don't know. And when I don't know, I'm just looking to, just explore and look for stars to align and to get a better read That's all you could do. Things don't always have to be clear. And there's nothing clear about the markets right now, including this. So we wanted to check in on what's going on with the blood indicator, 3-month treasuries over high yield credit. Let's start off with just Luke's overview of what he believes is going on with credit. Let me pull up it over here so we can come back to this chart as well. All right. And we'll start with Luke. And Luke, aka Lucastas, has over in the macro channel on Sunday included a chart. And one of the main takeaways over here at the top is the target zone, right? And like if you're seeing this downward sloping, elongated channel and or wedge, we had the breakout over here. This was during the tariff uncertainty in April, and you saw it accelerate up. And then you could see that we're back down neutral into the channel. And whether or not this is correct or not, if you see extending this line back over here, so would breaking out above be the next breakout? And if so, right, potentially targeting in this area, look above the crisis zone, right? So we could on a more of a, on the other chart, take a look further at that crisis zone. And then you have obviously a rejection down over here, and everything is gravy and stable. Where do I think Bitcoin will be in October of this year? Ooh, that's a tough one. Because why I say it's tough is this, is because what I'm trying to be able to navigate is, and right ahead of it happening is just this period. And I'm looking for, as we come towards the end of September, my own belief is that we are going to be accelerating upwards. So I mean, that might obviously not happen. If September the Fed begins cutting, if the data between now and that September meeting continue to deteriorate, I'm going to have to be in the mind frame that we're cutting into a recession, and I'm not going to be very bullish at all. And then I'm going to be leaning specifically into what those technical breakdowns look like. We're still above the most recent breakout of the NASDAQ of its previous all-time high. So the first thing that would need to happen, the first major breakdown, would be to lose that, right? And if we lost that, that's the first thing that would have me beginning to change my posture. That's not happening right now. As far as Bitcoin specifically in the near term, one of the things that we are looking at, I'll just come to this chart over here because it's easy and it's right in front of me, is, and I should make this line a certain color. All right. Like I'm putting it green because that should be support, right? And if we lose that, that's right when Bitcoin bull runs is also, and appropriately, like there's the wick. You could see the touches here, right? It's a box. They both belong there. Go to the wick. If we close below there, that's exactly where Bitcoin bull runs would be exiting the market as well. And at that point, I'm going to say we're going from a 15% correction, and then we could obviously and clearly be headed for something bigger and take a while longer to repair. So that would put me into a break below that green line. That would take me from currently very bullish, although as you know, only Bitcoin bull runs is in the market, but Bitcoin bull runs is in the market, and that suggests the long-term momentum and trend has the possibility and probability to extend upwards. But losing that Bitcoin bull runs out in the market, that for me would be a failed breakout, right? Just trying to get a clean look at it. And if that's happening, then into October, are my expectations subdued? Obviously, Geo, if we break out from over here and we continue a leg up and we start, hitting our next target zone of between, I can't even see those lines over there. Our next target zone somewhere between 125 and 130. I'm gonna be much more bullish going into October, November, which should be very favorable times of the year. And, I think for me, under good circumstances and without an unforeseen event that's highly positive, like the Bitcoin act, like $150,000 Bitcoin coming into the end of the year seems really bullish and really, really good. And I would like to see that happen. Those are my expectations. Unless we have some type of breakdown, and that's what I'm watching. So I can't give you a price prediction of where I think that will be in October. I'm trying to navigate this summer doldrums that we're currently entering, and I would like to see coming into what is a favorable time of the year for actually risk to be acting favorably. I don't know that any of those things are going to happen, right? So that's what I'm watching and navigating. Don't know if it's too soon to degen. It's always time to degen. Stock on the MicroStrategy version 2. I'll take a screenshot to bring that into tomorrow. Take a look at that. Let's talk about this really quick. As we're talking about Bitcoin, this is what I personally think is the greatest risk right now. And this is going to be really interesting to see if I'm right or wrong. This is Jan saying, look, I just sold all my Bitcoin for this 4-year cycle. Maybe it's too early, but at a profit since dollar costing between 16 and 30K. And I'll buy again in 1.5 years from now. And here's the problem with that. Not the problem. Here's what I think is the problem with that. And let me go ahead and just show you over here. And, right now we're in, a year and a half from now, a year and a half from now. So I'll come to the summer of 2026, which is right over here. And then a year and a half. I don't think that a year and a half from now, especially a year and a half from now, that the odds are favoring being able to get Bitcoin cheaper than it is today. I strongly think against that. So I think that as we looked at a lot of people getting left behind, in so much as that a lot of people entered into the space and they're like very aggressively accumulating altcoins. They call them their bags, and they're looking for that moment of alt season in order to sell and buy Bitcoin. And as Bitcoin the last 2 years has been on a tremendous bull. I mean, look at Ethereum. Ethereum right now is below its previous cycle all-time high, and Bitcoin is obviously well above it. And a lot of people are not participating in the bull run. And if I'm right about the 4-year cycle, about the changing nature of the structure, and to me, it's pretty clear that we're not seeing these major euphoric melt-ups. We're not seeing, obviously, the 30% drawdowns for the last 2.5 years is glaringly different than previous cycles. And we're seeing more of what that move that we've been looking for. And I think it's illustrated here as we move into the ultimate market opportunity. And it's more along the lines of this, right? And I think that the possibility here, the greatest risk that I see, is that people, and I think it becomes more if Bitcoin makes a move towards 150 into the end of the year, then I think a lot of people are really looking for that 4-year cycle top. And a lot of people, I think, will exit. And at 150, if you're exiting at 150, yeah, then you could see easily a 30, 40 percent correction from that high and have the opportunity to buy back. I don't know if that makes any sense from a tax standpoint, but there's people in different jurisdictions all over the world. My what I believe is one of the greatest risk here is that someone like Jan exiting the market here and then looking a year and a half from now to buy again lower, the opportunity for that to occur, especially once you get a year and a half out, I think is extremely low. And I think that there's a greater probability that he's buying back higher and or because price is higher, won't buy back, waiting for that drawdown to come. And then if my projections actually wind up occurring, it's completely left behind. I think that is not only a risk to a lot of people, I think that that's exactly what's going to happen to a lot of people. And I think that if we do get a move up towards 150, that a lot more people, and I saw like a lot of people talk, like the Bitcoin bull runs could prevent that from happening to anyone. Right. And if you were Jan or anyone else, like you're much better, right, exiting when the Bitcoin bull runs gets out of the market and being in when this is a safe play to drastically outperform Bitcoin buy and hold. And there's not over a small time, like if you start tracking this from 2023 on the Bitcoin bull market, you're not going to outperform buy and hold for this stretch up, not until you get the next move down. At this point, then you'll be even. And then if Bitcoin moves into any type of prolonged REM, you're outperforming it. And then obviously during these phases, preserving your purchasing power as you enter into the bear market is really going to preserve it. Anyway, back towards what's taking place over here. Let's take a look. We were looking at the DXY and it was just like, well, there's not a lot of clarity there for myself at this particular moment. And then we wanted to get some clarity by looking at what's going on with the blood indicator. And we saw where we can make the observations. Actually, I'm going to bring an easier observation into this puzzle and into all of this. And that's, when you see the cross occurring above the 100-week SMA, and you see that this is off towards, somewhere like, let's just call it to make it easy, like, 0.4 or 0.3 and below. When the cross is low, does that signal it's a good time to buy risk? And ultimately, I'll just tell you right now, I'm going to look at things from multiple different angles. And each one of them is simply not authoritative and conflicting. So let me show you that right now. And if you move, well, I guess I'll start here. Just to stick to it. So here's when you see the cross above, and you can see that during this period, or I should do it like this for you. Here's the cross above, and you can see that risk over here, S&P runs another 64%. Then you go to the other cross down over here, happening in 2010, and you see that risk runs massively. I would imagine that in order to have like an exit, you need to see a cross back below, above that 0.4, just simple, and a massive run, 160%. And in this one, this is really poor. Like this is where I say that it's conflicting results. And you could say that here's the cross and here's the cross below. And you'd be like, oh, well, that was up another 40%. Yeah, but if you look on the cross above, you saw that S&P still corrected another, I don't know, 12, 15%. So that doesn't really work well for me. but maybe potentially the best read on the blood indicator is actually the cross back above from a low level, and that might be. Oh, you could still see Jan on the screen. Appreciate you. I hope that didn't mess anything up. What I was showing, the one that's difficult is over here, and you could see over here right around March we begin that cross back above, but there is a 15% drawdown, and then up until the next cross, obviously there's another 40% move up, but that's offsides for me. That's offsides, and just bringing it back further over here. Right now we saw a cross down below, and that's the worry, is when you have the cross down below. I'll start over here in August of 2007, and that was pretty close to where the top was, and then we went to a major correction. Now this one's different. You come to where it crossed here in August 2019, and it did kind of spell a warning sign for what was the February March 2020 massive sell-off. But first, there was a 15% move up. So here you have, offsides 15%. Here you have offsides 15% on the other side of the signal. What about over here? Like, if we don't have the data, but this ultimately would have crossed somewhere in this area, right? Somewhere in this area, if this red line was extended, was where it crossed, and we'll just estimate, and we'll say that here you get the down cross, and I don't. That's another 40% move up, which is kind of in a similar situation we're now with the 1998. Sorry. Sometimes I appreciate it. Lots of love, CTM. And then you did have this little bit of a scare, 17% correction. So was it correct in calling the first scare? But we did have a big move down and then a recovery towards the 100-week SMA, which you're seeing now. You had the big move down and then a recovery up. So I mean, there's no clarity here whatsoever, in my opinion. And right now, after having a signal, and then we had a 30% correction, or S&P 500 was 17% correction, NASDAQ 30% correction. Like, have we reset? You could see from Luke's view over here, you could see the move up, and then we reset neutral. Whether or not we're about to see another spike higher or continue like that, it's unknown. There's no clarity whatsoever from my vantage point. That's it. I can't. There's nothing else to say. Now I could say this on this move, like on this first warning signal, bearish continuation pattern on the breakdown. That then led to what was a big event in the dot-com bubble, eventually bursting. Was this the warning signal, and are we about to see, or are we going to see some type of bearish continuation pattern happening? I'm not sold on that. Obviously, I still have very overall bullish posture, right? My expectations are into the end of the year, we're trading higher, and I'm worried about navigating as the cuts come. If they come, right now, markets are pricing in cuts are coming in September. Would this be, do we need to break above this line here in order to once again be okay, right? Maybe that might what need to happen. And until then, we're actually in further jeopardy. I can't kind of signal what a breakdown would be, and it would have to be taking out that swing low at this particular point until more PA develops. That's something to watch out for. Let's just put like a line in the sand. And then as time passes and as further PA develops, we could then use that to adjust. And then would this be more along the lines of a safety? And then I want to look back over here when, like, how much further here's kind of where we are. We're trying to reclaim the 100 SMA. I mean, risk didn't really move that much further above at all. Here you have like price making that high. Look at that. It comes. This is great. If you could bear with me. So we talk about right now that NASDAQ has just took out the previous high. It's not trading below it, which would be the first warning sign. Here you can see it, the S&P trading back below it and then back above it, back below it. So the second sign, the first sign for me of any type of breakdown occurring would be price trading back below the previous all-time high. And then we got to go to what the next breakdown would be. Let's take a quick look on the NASDAQ. Horizontal for now, and that will be variable depending on. So here we have this line over here. That's the previous high. As long as we're above it, we're good. This for me is an early warning breakdown. And now that we're back up over here, this is an underbelly, right? So I'm going to move that. I didn't mean to move that. Hold on. I'm going to move this like this. And that's like early warning. If this breaks, I think that there's a good chance we come in to test at least the support. What should be support, broken resistance. Now, this would be, I'm trying to find now what would be the ultimate breakdown, right? And this is likely what that is. So we're coming in here from what was the support, resistance, support, and I can't see anything else. I mean, is that structure and is that a problem? I don't think so. Could be. Well, yes. I mean, I see structure. It's very difficult. This for me would be what would be the second. They happen at the same time. Look at that. So it's very clear. Early warning sign, a break below these two. You break below this line, you take out what was the structure. I'm not I don't have a crystal ball. I don't know whether or not something like this. It's very difficult. I don't have a read of when that ultimate trend line breakdown would occur, which makes things more difficult for me. Let's try zooming out then. I don't believe this is correct. And not only do I not believe it's correct, the distance between there and here that's just way too late. That doesn't work for me. All right. I mean, the best read I could give for now is what I have it as. We don't want to break below that green line. And if we do, then likely, I know we have horizontal support, but likely we are going to be trading below. So that right there, as far as from the high or from where the market is now, I mean, that's nothing on the NASDAQ, right? So I guess that's what we're watching now. I don't think that's a technical breakdown though, right? And that's my problem is I'm trying to find out where a technical breakdown is. And I don't have that here today. So for tomorrow, I'm going to try to have that for us a little bit further. And right now we're looking at, break of the purple. That's likely taking us into the green. Break the green. That's likely going to take us or set up a test below of the previous high. And that sets us, obviously, we're already into a correction at that point, and that's where we are. Thank God for the opportunity to be able to know when to be in the market, when out, and on what side. CTM. Greg, I guess we riled up, right? I appreciate you. Oh, everyone, I hope you enjoyed it. We'll be back at it tomorrow, and we'll continue strong. CTM strong. Have a beautiful day, everyone. God bless you. I'll see you all back tomorrow.